Hello, hello. Good afternoon. Hey, Zoran, first one in. How are you doing? Yeah, I'm doing well. I'm doing very well. Glad to be doing this session again today. Glad to see that you're here with us. So, all good. How's your trading been, Zoran? Positive, so. Well, positive is good. Positive is good. Hey, Binoj. Hey, Trung. How are you doing? We'll give it a couple of minutes before we get started. Today, we are going through the trade management part 3 or 4, idea invalidation. All right, so quite an interesting topic. If you think of any questions that you might have as well, might not be based on the topic alone, could be anything else on trading related. Happy to answer your questions if you have any pressing questions. Doing well, Trung. How are you? All right. Hey, Elise. Hey, Yuk. How you're doing? I see that I'm getting a couple of familiar names, so it's good to see you guys making it a habit to turn up. It's very good. I hope you're learning heaps from these sessions as well. And not just about learning heaps, it's also about applying them to your trading strategy, applying them to your trading setups. Please let me know if you have been applying, if you applied them, if you have any questions on what we've talked about from before as well. I'll be happy to do a quick recap or to review any things that you might want to look through again. One more minute and we shall get going. Right, and as usual, let me know where I know a lot of you have seen where you've come from, but let me know where you're joining me from again, just so that I get you typing into the chat. Hi, Isha. How are you doing? Good afternoon, everyone. Alrighty, so let's get started. Okay, before I get started, wondering where we're located. We are here at the. Why is this? Hang on, let me see. Live transcription has been enabled. That's interesting. How did that happen? Okay, let's see about this live transcript. Okay, we are located here in Singapore, so that's why you see whenever I look at charts, it's always GMT +8. So we're in Singapore here. All right. Okay, so let's get started. Today we are looking at the trade management part 3 of 4, idea invalidation. The last time I did this trade management session, part 2 of 4 was the break even levels. Okay, so this is the other idea of how you can manage your trade, right, with an idea invalidation. I'll tell you more about that as we get to it. My name, I think most of you know, I'm Jin Dao. Most people call me Jin, so please feel free to ask any questions at any point in time in the chat as I go through the material and I go through the examples. All right, so as usual, a quick disclaimer before we go further forward. Any information, context, opinions which are expressed in the presentation in the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Right, so I will be sharing with you some ideas on how to manage your trades. I'll be sharing with you possibly some trade ideas as well. When we look into the charts, please remember to do your own due diligence before you enter into any trades. Okay, what I mean by due diligence, do your analysis, right? Make sure that you are entering a trade which is not over leveraged. Make sure you are trading with the right margins and the right leverage. Don't over trade, right? We do go into quite a number of trade ideas and trade setups, possible trade setups. Please make sure that you don't, you manage your trades in terms of the number of trades you get into as well. Based on my experience, what I've seen is that it's not so much the bad trades that causes the most problems. It's the over trading, the over leveraging that causes the most problems to traders. Okay, so make sure you do your own analysis and watch your leverage, watch your trade sizing and trade numbers as well. With that, a couple of things to get through today, right? Trade management, I'll tell you again a quick recap on the anatomy of a trade. I'll tell you about the trade idea invalidation, right? Where do you place a trade idea invalidation? When to think about trade idea invalidation, and then examples of some trade ideas invalidation in action. I have some pre-selected, and I also will be going through in the charts together with you on some possible setups and also the possible levels to consider for a trade invalidation or an idea invalidation. With that, just introducing myself and the team again. My name, you can see here, I'm Jin Dao. I'm one of the prop traders. I have been trading for many years. I actually just told someone, just counted, we've been trading since 2007, 2008. So it's been a long time now. It's not about what you read or what you've considered, all right, or gone through. It's a lot of trading is about that screen time. It's about looking at the charts. It's about experiencing the different market conditions as well. So, got a lot of experience with that. If you have any questions, please feel free to ask. Even if it's not just about idea invalidation, it could be about current trades that you might have, and you might want some thoughts about that. I'll be happy to guide you through that. Okay. With that, let's get into it. The anatomy of a trade, like I've been telling you guys before, the thing about it is you got the entry, right? A lot of times most beginners or relatively new traders will only consider these three things when they look into a trade, right? Entry, where do I buy? Where do I sell? The price, the exact price they try to buy it, or exact price they try and sell it. That's the entry. And then if we're lucky, they consider the stop loss, right? So entry point, let's say they're looking at buying there. The stop loss will always be below or beyond of that support level. So we have a support level there. Stop loss will be beyond the support level. And then your take profit is where you close out your trade in a profit, or it will automatically close for you in a profit. Take profit is always before a resistance level, before a level. So that's a resistance there. So that would be your take profit level there. Okay. So again, I like to harp on this just to make sure, everyone remembers, seal it into your mind there. Stop loss is always beyond, right? Beyond the, oops, let me try and write that. It's always beyond the support level or beyond the resistance level. And then take profit is always before. Right? It's always before the resistance level or before the support level, because what you want to actually consider when you start thinking about stop loss and take profit levels is, for the stop loss, you want it beyond, because of that support level is going to protect this stop loss. This support level is going to protect your stop loss, right? We don't expect a support level to break. You don't expect the floor to break. You don't expect a foundation to break. So when price comes down, we don't expect it to break this level. We always anticipate that it might bounce from a support level. So that actually gives you a bit of protection to your stop loss. And the same reason with that, if when price goes up, right, if we had our take profit beyond the resistance, then it would be very hard to hit that take profit level. We want it before that resistance level so that price can go up, hit that take profit, and possibly bounce back down again, as we don't expect that resistance level to break. Okay, so that's that's the main reason why we have our stop loss beyond the support level, and we also have the take profit before the resistance levels. So that's what everyone considers, those 3 points there. We went through a bit of more info on the previous sessions about a break-even level. Right, a break-even level is, just a quick recap again, is when you have your trade running. So for example, again, we bought at this level here, anticipating for price to move up. Right, as it moves up, we have our stop loss below. Once it comes to a level, right, which we might measure as a interim resistance level or a consolidation level, once it moves up to a certain point that you've pre-identified, you'd move your stop loss up to the break-even level or slightly above that buy price, just so that you cover spread, so that you cover trade commissions there, so, or at break-even, so that in the worst case, if price does drop back down again, you got out of a trade, you wouldn't have lost money. In the best case, you've got that trade protected and you can actually hold on to that trade towards that take profit level. Okay, so that's the break-even idea, the one that I just went through the last time around. We do have partial profits because at that level of consideration, you might want to even consider, hey, moving my stop loss up to break-even is a good idea, protects the trade. But not only protecting the trade by a break-even, you could also think that at that interim level, you might want to close out maybe even half the trade, right? So what I mean by close out half the trade, you might have in a round number scenario, you might have a one standard lot open. You might, as price moves up within that consolidation area, you might close out half the trade, close out 0.05, and then leave 0.05 to move up towards, possibly move up towards the take profit level, just so that you have secured profit halfway, and then after that you got the other half to take on a little bit more risk, and in the worst case scenario it comes down towards break even. Okay, trailing stop, we'll get through that I think in the next part 4 or 4 of trade management. Today we are going through the trade idea invalidation. All right, so far so good. Any questions? Right, I think most of you, or a couple of you, were here for the break-even and partial profit session. So let's get through into trade idea or trade idea invalidation. So what it means by an idea invalidation, right? What does it mean by an idea invalidation? It is when, you can see here, this is the main thing to pay attention to for now, right? It is when idea is placed before your stop loss is the level at which you look at the trade and you go, wrong entry, right? As much as you would hate to accept it, we do have to understand that we're not going to get all the trades right. There are times where we're going to enter a trade and realize that, wait, that was wrong, right? Price is moving against us. It's wrong. How do we get out of a trade? There's so many ways to get out of a trade. You can just, well, in the worst case scenario, react and just close out the trade based on emotions. Leave it to hit your stop loss. Worst case, another bad case scenario. Or you can start thinking about where to get out of a trade at that minimal loss or that break-even level. Okay, so you want to consider how to get out of a trade ASAP, and when this level is reached, your take profit is moved to your entry. Right, main thing about trade idea invalidation and idea invalidation is when the take profit is moved towards the entry price. Okay, that's the, if I have to put it in a couple of words, is when you realize your trade is wrong, right? The entry is wrong, and then you have to move your take profit towards entry so that you can close out your trade quickly with a small chance at a break even or to just get out of a trade, minimizing a potential loss. No, so yeah, you wouldn't move your stop loss. Okay, you move your take profit. This is for idea invalidation. When you move your stop loss was when we started considering break even. This is when you're in a loss. Okay, so in this idea, just to walk you through it, you can see that, hey, price went up, hit that level, turn back down, hit that support here. So I'll put this as support. Okay, this is a resistance there. Okay, and then you can see that it went up. This is another resistance level. Hit, came down, hit, came down. And at that point, right, at that point, you might start thinking, can I sell this down? Because it's been trading in a relative range. Can I sell this down? So you'll be looking for an entry to sell. Okay, your take profit will be right here. Your stop loss will be, as we said, above that resistance level. Okay, and then what happens? As we all know, this is some things that happens to us all the time. Price, once you sell, price goes down. It goes down, down, down. You start thinking, hey, I might be actually getting to my take profit level, but you didn't close out in time, and then it reverses. It reverses back towards that resistance level. At that point, you start thinking, what happens if this goes strong and breaks above my resistance towards my stop loss level? Okay, so as it pushes up strongly, it breaks above an interim resistance level, pushing towards the next resistance, almost towards your stop loss level. You want to consider as it comes towards that resistance, the concept of an idea invalidation, right? Admitting that you're wrong on the trade, putting your take profit towards entry. Okay, so at that point, it's oh, I don't think price is going to move lower again. It might move up. You move your take profit level here towards entry. Towards entry. Assuming that you can see that price seems to have changed that trend, it comes down, hits your take profit at break even, and then pushes up. It saves you of that loss. All right, it saves you that loss because you close out at break even as opposed to closing out at a stop loss level, which could be quite, a 1 or 2% on your trade, on your account, because we risk 1 to 2% on a trade. So that would save you on the worst case scenario of that trade hitting that stop loss level. You're closing out at a modified take profit when we move it to entry level. Make sense so far? Have I lost everyone, or are you okay? Quick thumbs up if it's all good. Good stuff. All right. So with that, let's look at another example here. Okay, another example. You can see that at this point, we're looking at this as a good support level. You can see price coming down towards this point. So what's the anticipation? Hey, price is going to come down, hit this level, and bounce up. All right, we're looking for this to bounce up. Oops, wait. What if price shoots up and doesn't correct down to entry level? Yeah, so coming back to this example here again, if it comes to that point, let me just clean up the charts a little bit, easier to see. Okay. This is, when it comes to this level here, it's already threatening your stop loss level, right? Your trade is already threatening that stop loss. You are hoping, don't trade with too much hope, but you're hoping that in the best case scenario, that it's not going to go down all the way. That in the best case scenario, I'll be happy to get out at a break even level. So we move this up we move stop loss, we move the take profit up towards entry. In the best case, it comes down, hits break even, and then you save yourself that loss. In the worst case, it doesn't come down towards break even. It actually comes down a little bit and pushes up, or it just continues to shoot up. Then at least you tried to have a break even level, but your stop loss is still there to protect your trade. So how I would rank it is, in the worst case, you have your stop loss to close out your trade, right? In the other scenario, you would have your idea invalidation, right? Because you're hoping for it to come down and move up. And then in a best case scenario is, well, in the best case scenario is your take profit, right? You maximize on your trade. And then in between this is when you close out, when you close for a small negative, right? You might see it come back up, you might close out for small negative, or you close anywhere in between for a small positive. Okay, so these are the scenarios that your trade will end up closing on the scenarios where you enter a sell order here. In this case, you might actually see that, hey, it might be quite near, but you might actually see it pushing up, and you could have closed out there as well if there was some reason that you would have closed out on that trade. Hope I answered your question there, Trung. Okay, so coming back to the example here, price came down towards that support level here. We're anticipating for it to bounce off this level to trade higher. You can see here, entering a buy entry there, take profit up to that 50% fib level. Where would our stop loss be? All right, our stop loss in this case, where is it? Would be near that 127 level, right? Near that 127 level. So you always want it below. Okay. I would also identify that. Try to draw a straight line. Okay, there's another level there. But then if you're using fib levels, because we got our take profit based on a fib level, so we can also identify our stop loss based on our support levels based on a fib level. So those are the Fibonacci levels. Our stop loss will be beyond that level. Okay, so beyond that level. So far so good. Entry at this point, anticipating a move towards the upside, anticipating that bounce towards the upside. Stop loss there, support level there. Okay, where would you start considering that idea invalidation? Just at that support level. Okay, so remember, while we know that what's an idea invalidation, right, is moving take profit to break even, while we know that, when do you, or what is it supposed to do? You're supposed to minimize your loss to a break even level on that trade. And then when do you want to do it? Pre-identify at which point would you consider an idea invalidation. It doesn't always have to be that close to stop loss. Can be a little bit further away, depends on where you identify that level at, or depends on where you identify your stop loss at. So you want to just have that all set up. Whenever you enter a trade, you want to know that I got my entry. I know in the best case scenario, where am I going to automatically close out that trade? In the worst case scenario, you'll automatically close out there. If price drops like that towards my idea invalidation, that's where I want to consider to move my take profit down, close out the trade. From what we talked about before, when you want to consider break even, could be at about that 61.8 level, 38.2 level, if price moves up, or even slightly before that, about that point there. If price goes to that point, we want to move our stop loss towards break even. Okay, so there are chances where you can move stop loss up to break even, close out partial profits, and there are also, in the worst case scenario, to move take profit down towards entry, so that you close out at, potentially close out at a break even when trades are going against you. Okay, so we have those levels all put in together. These are all based on the trade anatomy of a trade. And then what happens next? You can see that we're expected to go up, price comes down, bounces around. You don't want to move, you don't want to do anything yet because it could come down, bounce, and shoot up yet. But it comes down, hits that idea invalidation level. You can see here. It hits that idea invalidation level, bounces back up again. Typically, what I would say is a move like that, right? You can see a tail up, a shadow up, a tail down. Could be because of a news event, could be because of a high volatility event. And then you know that high volatility events are going to spike up and spike down, move around quite quickly, quite fast. Once it comes down, hits that idea invalidation level, you start thinking, do I want to move this take profit down towards my entry level, right? Because you know that it's going to struggle to move up. Could be an idea or trade to push it down, then you move your take profit down. Question was, is the kind of shorter time frame or trading types should be more suited, or is there a kind of shorter time frame or trading types that should be more suited for idea invalidation? Because longer time frame, the longer we have, more time to manage to accept possible loss. You can actually consider it in, I would actually consider it at the H4, H1 time frames. I wouldn't say that I wouldn't consider it in a too small a time frame, because too small a time frame does tend to spike up and spike down a little bit more than usual. So I would say, based on my experience, it works very well on the H1 and H4. Okay. And also because why on H1 and H4 is because when you move your take profit down towards entry, right, you're hoping for that spike up to close that trade, right? So sometimes you might not be watching that chart. You might not be sitting there, you know, H1, H4, you don't want to be sitting there watching the chart as it goes down. I can tell you that, you know, when price is trading down in this way or bouncing around in these levels up and down, what happens when you're looking at your trade and it's in a negative, right? You get very emotional with a trade. You start thinking, can I buy? Can I move my stop loss lower? Should I, you know, in the worst case scenario, you think about removing the stop loss, thinking that it's going to bounce from this level. What you can do, remove. This is one way to lessen the emotions in the trades. Comes down towards your idea invalidation, you move your take profit down towards the entry level, towards that break even level. Then what can you do? You can't do anything about it. You just go, okay, in the best case scenario, at that point, trade closes at a break even. That's it. Best case scenario, you got off a trade at zero. In a worst case scenario, it's already in a negative. In a worst case scenario, it doesn't go up to your break even. It actually comes down and hits your stop loss. It's just part of another trade that you have entered in your overall trading journey. Then you could actually just set those up and then leave it. Don't even think about it, walk away. Don't have to fret and stress over that trade anymore. Okay. Obviously, I would hope that all of you would enter a trade and then you see it just move up towards your take profit level. But we're planning and we're setting up for a worst case scenario. Okay. So in this case, I hope I answered your question there, Trung. You're most welcome. Okay, so in this case, as it comes down, you move your take profit towards that entry level, towards that break-even level. And then what happens? In this example here, it goes up, hits your take profit, hits your entry level, you get out at break-even. To save you that move towards the downside, which would have hit your stop loss. Okay, we all know that trades or price is not going to move in that straight line. We all know that price is going to move in that zigzag fashion, right? It goes down, it bounces back up, it goes down and bounces. So that gives us that chance once it goes down, go up, hit our break even before moving lower again. So this is how you set it up for that scenario that if you enter a trade and it goes down against you immediately, then you would have something to protect you in a worst case scenario. Makes sense so far? Just as a question for you guys here, how do you, while we've been sharing with you about a moving stop loss to break even or partial profits, close out, and now with the idea invalidation, how have you actually been managing your trades? Do you typically, I'll clear this out, do you typically just set up your trade and then leave it like that? Entry, stop loss, and take profit, and then see what happens? Do most of you leave your trades open until it hits either a take profit or a stop loss? Or do you actually close out your trades, actively close out in the middle, or let it hit your stop loss? Or do you actually move your stop loss and your take profits? What do you do? Let me know. I'm looking for your answers here. Okay, Zoran, I hope you mean that you leave it open until it hits a stop loss or take profit. Okay, so Maxime says usually move stop loss if price goes up, so that's good. So you move it to, Maxime, do you move it to a break even level, or do you move it like a trailing stop as price goes up, you keep moving your stop loss higher? What about Trung and everyone else? What do you guys do? Good stuff. Very good, Maxime. So moving stop loss to break even first and then higher if possible. Fantastic. All right. I see someone said that they'll move the stop loss to break even and just let it run and then keep moving take profit higher. Okay. All right. So sometimes once you consider moving your take profit higher, you also want to consider moving the stop loss up as well, just so that you always protect that trade. You don't want to be holding on to a trade for, in this another example, just something I would add on, digress a little bit. You don't want to be looking to buy here, and then as it goes up, you don't close out your trade, and then you have your stop loss at the low point here, moving it up to break even, and it comes back down and you close out there. All right, so always look to still close out your trade at key levels, even if you close out partial trades at key levels, just so that you realize that profit as prices moves with you. Okay, and now if price moves against you, you know that you're going to move your take profit down towards entry so that you protect your worst case scenario as well. Okay, so with that, what I want to do is I also want to share with you some possible some possible examples as we go through it. Trung says, haven't been much successful, but theoretically I'll move stop loss dynamically. Okay, so yes, you can move stop loss dynamically. Try not to move it lower. All right, so if you don't keep moving it lower if price goes against you. You want your stop loss to be fixed at the lowest point, and you can only move it higher when you're in profit. Don't move stop loss down when you're in a loss. All right. So I got an example here on the Aussie dollar, right? Aussie dollar on H1 time frame. Okay, Aussie dollar here on the H1 time frame. You can see that, hey, we found a support level there. Right, we found a support level there. You can see that it's gone up, came back down, gone up, came back down. For example, here you would start considering that you might consider, let me zoom in a little bit. You might consider that at that point, hey, can price move towards the upside? Move this up a bit. Okay, you might think that can price move from here, moving up. Okay, so you would have bought at that point, right? And then your stop loss level could be, let me see. Based on this example here, we'll have our stop loss. You're saying not to move stop loss lower. Wouldn't you say the same goes if take profit not to move higher? If you want to move take profit higher, would you recommend to keep a partial take profit at the original point? There are times where, good question there, Maxime. So the question was, you're saying not to move stop loss lower. Would you say the same goes with take profit not to move higher? If you want to move take profit higher, would you recommend to keep a partial TP at the original point? I would say that, let me just find another example. You would be okay. I would think that it's okay, or based on my experience, I would say it's okay to move take profit higher. But yes, I do agree that you should be looking to close out partial trades as price moves up. Okay, so I don't think you can put a partial TP, but you can close out partial trades as price move up. So in this case, let's say that you were looking to buy, or you bought here. Okay, stop loss would be, let's say, below here. Take profit originally was there. So as price goes up, you might want to close out some trades, partial profit there as you move that take profit higher, right? Then you see price come back down, goes back up, doesn't hit your take profit level. You can see that shadows towards upside. You want to close out that trade at that point there. Okay, so you can move take profit higher just to try and maximize on the trade. As you move your take profit, you move that stop loss up firstly to break even. Then you can also push it up again as it moves up, or close out partial, and then you can try for that upward move. But I want you to see that it's not moving higher, not sustainable move towards upside. You can close out that trade without I don't think there's a partial take profit. It'll be a partial trade close. All right, I hope I answered your question there, Maxime. Sure thing. Fantastic. Okay, so back to the example here. So we can see that you expect price to push towards the upside, but what happens? It actually goes up a little bit before turning back down again. Right, it goes up a little bit before turning back down again, bounces at your entry level, and then trades lower. In this case, you'd have your stop loss, say, at about that 138 level. Below that 138 level, this will be your stop loss here. I'll move this line a little bit so you can see. There'll be a stop loss there. You say that at that point, at the 138 level, will be about my trade idea or idea invalidation point, because it's coming down. It's going to hit my stop loss. Can I move my take profit down? Once it comes down, hits that level, you'd say, okay, let's move take profit down. Okay, I'll move it just there. And then you can see price goes up, hits that level, and saves you from that stop loss there. So you close out at break even rather than closing out at the stop loss there. Okay. So that was one example there for the Aussie dollar on the H1 time frame very recently. The US CAD as well. So the US CAD as well. Let me see, where was the example we had? Okay, here. So you can see that we had our resistance level there. Look, hit, turn down, hit, and turn down, right? So we're looking for this to break. As it turns down, we're expecting this to turn down and break that level, right? But what happens? All right, what happens there is that it bounces back up. Okay, I want to show you this example here is because it bounces back up. This is idea invalidation. So at that point, you will start thinking, okay, as it comes up towards this point, do I want to move my take profit towards break even? What you would have done, you move take profit towards break even, but it doesn't work. It doesn't work all the time. In this case, it continued up. I think Trung asked that question earlier, right? It continues up, hits that stop loss level, and then it comes back down before going back up again. So it's not always that you move your take profit to break even and it's going to hit. So there are times where you come back, you can move it to try. It closes out. We can see it came very close again before bouncing back up again. The euro dollar here, I like this one. All right. I like this one here. Let me just zoom it in a little bit. You can see that we found a good strong support here, right? Broke up from this level, came back down, found a strong support, bounced back up, came back down. Looks like it's forming a strong support level. You would anticipate that price was going to push towards upside, and then you would have bought at that point. Ooh, look at the euro dollar, euro pound, sorry, euro pound dropping strongly. Okay, I think it's because of the pound dollar pushing up more than the euro pound dropping. Let me just check this. Euro dollar not doing too much, but a pound dollar pushing up. That's why we see the euro pound pushing down strongly. Okay, so you can see that with that at that level pushing higher, expecting it to push higher, what happens? Price drops, right? Price drops. You see that 127 level, you consider that as your idea invalidation level. So you move at that point, you move your take profit down towards the break even level here. You can see price went up, hit your break even, and then came back down, which would have hit your stop loss level, right? Euro pound now dropping very strongly. Would you ever demonstrate this idea on the NAS? Market influence government policies less smoothly moving like Forex. Okay, let me see. Where is my S? Okay, there we go. Let me find an example. Let me see. Let's say that at that point, this influenced. But yeah, okay. Let's see at this point if we were to. Okay, so I'll just do a quick. Oops. Get away. Take that out. Okay. You can see that for this on H1 time frame, trading lower. It's currently at 12,188. At this point, you would say that we're possibly looking for it to trade towards the downside. Okay, so we would say that you wouldn't want to be looking to sell here because it's right in the middle. I would say that that's a good support level, right? A good support level. So you would say that, hey, let's look for price to come down towards this support level, and if it breaks lower, right, if price comes down towards that support level, all right, we'll be looking to sell down if it breaks lower. So you'll be looking to sell at that point. Okay, take profit. Let me just try a Fibonacci level here. Okay, take profit, let's say it would be at about the 11,915 level. Okay, just slightly before that. That's your level there. And then you would say that as we look to sell, okay, we look to sell past this point. We look to sell past this point. Resistance now, support turned resistance there. then I would say my stop loss will be above that point. Okay, so let me just clear this out so it's easy for you to see. Now what happens is if price comes down, triggers your sell. No, comes down to here. Let's move this a little bit higher so it's a better example. It comes down, triggers your sell, and then so it comes down, triggers your sell, and then it bounces around, but then it comes back up. Okay, you could have your idea invalidation at that point. This is not a okay, hang on. This is not the best example. Let me just do it again. Because we're right in the middle here, so it's right in the middle of that support and resistance levels. It's quite hard to do an idea invalidation there. Okay, let's try this. Nope, that doesn't work. Okay, let's say that if you're looking to sell at this point, let's just keep it at this point right now. If you're looking to sell from here, then in the wide sense, you would say that your resistance is at that point, so your stop loss will be beyond that. Okay, so just to let you, this is your stop loss here. This is your resistance level. And then that's your entry there as it's moving. And then your take profit, not the best in terms of a setup because we're just doing example, because it's not a good risk reward here. Okay, so at that point like that, then you would say that if price goes up, let me just try this out, towards that point. Okay, you could even look at it as a possible level at about that 23.6 level. If you see price bounce up this way, threatening, coming very close towards that stop loss level, threatening that 12,460 level, then you could actually think about moving, because you'd say that, hey, if it goes up, it could come up and hit my stop loss. You would consider to move your take profit now, in this case, towards break even as price comes up. So what you would be looking for is, as it goes up there to that point, you say moving my take profit towards break even. We're looking for it to come down, hit this level, and then possibly go back up or to get off a trade. You can use it, so you can use it with a fib level, with Fibonacci levels. You can also use it with price action. I had one example here. Let me find it. Where was my example here? I like to use it with a, okay, there you go. Oops, I'll take that away. Okay, so you can also, I like to use it with a price action. Okay, this is not the best one. Okay, this is not the best one, but you can see that, let's say that with that indecision candle there on the H4 time frame, you'd say, hey, I'm looking for price to turn down from that point, right? I'll be looking for price to turn down from that point. Then you would say that, okay, so you're looking to sell here. You're looking to sell at this point here. Idea invalidation, I would have right at that top of that candle, of that shadow there. So I would have my stop loss wherever it is. I could have stop loss up there, but I know that if I sold here and it goes up towards this point, it'll be wrong, right? I know that my analysis was wrong. I was expecting a counter trend move towards the downside, but it hasn't happened. If price goes up to hit that level there, then I would say, okay, with my entry there, I would move my take profit. I'll move my take profit up towards break even because price has gone up above that previous candle or towards the previous candle. I'm looking for it to turn down briefly before what would most likely happen is it comes back down and goes back up again. Okay, something similar like this. Oh, no, not really. Yeah, something similar like this. It hits, turns back down before pushing back up again. So I'm looking, if it goes up, hits my level, turn back down before pushing back up again. All right, hope I answer your question there, Trung. So you don't have to use it just based on Fibonacci. You can use it on price action patterns. You can also use it just based on support levels, resistance levels. Some people I've taught have actually used it onto moving averages as well. So once it breaks past or test a moving average level, I'll show you here. Right, so once you can have looked at a let me see an example. As it tests a, okay, here. Right, so you'll be looking to sell down. Once the price bounces back up towards the moving average, you want to consider that. Okay, we can say here, you're looking to sell it down or to sell it down from here. Right, where is price invalidation as it moves back towards that resistance level. Right, you can use the Fibonacci, the MACD as a resistance level as well. Turning back up, you're going to move it to break even before it closes out again. Okay, so I think this would be a better example here. So you sell it down, price moves up, you move your entry, so you sell it at this point here. You would have your stop loss, your take profit below there. You would have your stop loss, let's say, way up there. Price comes up towards that moving average. You might consider that, oh wait, looks like it might be wrong. You want to move your take profit towards break even, right? It comes down, hits your break even level, closes you out because you're wrong on that trade, and then it goes up and it would have hit your stop loss. I think stop loss would be more reasonable at that point there. Okay, so you can use moving average, you can use price action, you can use Fibonacci levels, you can use support resistance levels as well, just to help tell you at which point is your trade possibly going to confirm that it's wrong, and then you want to get out the trade as soon as possible. All right, I hope I answered your question there, Trung. Anyone else with a question? If not, let's look at some other examples. Pound dollar still moving up, not doing too much. Let's see whether we can find a idea there. Nothing yet. CAD Swiss franc. Okay, so this could also be an example here. Taking away the moving average for now. You'd say, hey, pin bar towards the upside, looking to buy, right? So you would have looked to buy at that point. Take profit might have been way up there. Stop loss would have been at that point there, right? When would I start thinking of an idea invalidation? Is if price comes down and test that low point of the candle. So now it's coming very close, right? Imagine if you bought there, straight away you'll be losing money now. You would think, okay, wrong entry, bad trade. I either can close it now if I'm sure it's going to keep dropping, or let's try and close out at a break-even level. So you move your take profit down towards break-even. We're looking for price to come down, hit that level, and possibly bounce back up, close out before turning back down again. Okay, so just a rough example there on the CAD Swiss franc H1 time frame. Alrighty. Any further questions? Dollar index still sitting at a 109.64 level, not pushing, tried to push higher, failed, still sitting back down there. Pound dollar still between that just below that 1.16 level. I think it could consolidate before turning back down. Let's look for what happens there. Okay. Okay, so if there's no further questions, what I would do is I would go and enter the session. Please remember, when you're trading, it's not just about entry, stop loss, take profits. You want to consider the break-even levels. You want to consider the partial close. And from today, I hope you'll start considering the idea of a idea invalidation, where you would have entered a trade, it's going against you, where to move your take profit towards that break-even level, just so that you can close out that trade as quickly as possible with a low loss and minimize your loss there. Okay, how do I get to view the other workshops you had on idea invalidation? No, it's not about idea invalidation, it's about trade management. I'm pretty sure it'll be uploaded onto the YouTube channel. So check out the YouTube channel. Check out the Vantage YouTube channel. Should be there. All righty. Fantastic. I hope you do enjoy the sessions. I hope you had a good session today. With that, we do have a couple of big news. Bank of Canada with the interest rates decision. I think the ECB with the interest rate decision as well this week. Trade well, trade safe, and I'll catch you again. Take care now. Bye-bye. Thanks, Zoran. Glad to see you again. Take care now. Bye-bye.